Okay, good afternoon. Welcome to the weekly take on the market. Today is Friday, January 13th, Friday the 13th. I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. We don't make buy, sell, hold recommendations. We try to stay in our lane, our circle of competence. Research, education. All right, so product thoughts. I'm sorry, product thoughts. Had product on the brain. Market thoughts. Then industry groups, stocks to watch, quote of the week. Same bat channel. You guys know the drill. I'll try to keep this short and sweet. There's not really much that changed from last week. And I do watch the videos after. I noticed last week's was 40 minutes. It's probably a bit long. So bear with me. I'll try to shorten this. Sometimes I just get going and going. So we'll pull up the index charts in a moment here, but and I apologize, this chart's a little blurry, but because I've because of the sometimes when you paste it and the source is BofA Global Investment Strategy, Bloomberg, et cetera, but the percentage of tech, which is all those tickers down below in the S&P, peaked at 30%. Look at the study climb from 2014 on. We're currently at 21%. So it's broken. The trend is broken. What's the normal kind of line in the sand? Where will it stop? Who knows? Tech's important. Tech's a big deal in the American economy, obviously. So I don't think it goes all the way down to 8% again, but you can see that overweighting of this area has kind of run its course. And normally when you get this type of big move, parabolic, and then it breaks, and your best case is sideways, even if it doesn't go down. So this is kind of the way I feel. I think the Amazons, the Apples, the Googles, the Teslas of the world are old leadership, not going away. They'll have their rallies. I notice Amazon's been up pretty good in the last few days. But I think as far as leadership, they're just kind of too big to take the mantle of a new bull market. So that means we need new leadership, and we're always out there searching for it. The market's definitely improved. The health of the market is a lot better in the last couple of weeks. It's a lot better than it was 9 months ago. So I'm hopeful that maybe we're kind of coming out of this, but there was a lot of damage done. So it usually takes a while to come out of that. Earnings revisions for the S&P are really falling pretty bad. That's both good and bad. It's bad that earnings revisions are falling, but it's good that it's being anticipated. So this next wave of earnings would be very interesting to see how these stocks react. I think the consensus is the earnings won't be all that great, but that doesn't mean the stocks go down, and that's the hard part. You can have a great earnings report and stock goes down. You can have a poor earnings report and stock goes up. It's all in, a lot of it has to do with what they say going forward. And it's a lot of it is, what was anticipated. So if the street expects poor earnings, slowly but surely that gets built into the price. And so maybe this recession that everybody sees coming is already baked in. It's the most highly anticipated recession in the history of recessions. So I've talked about that a few weeks ago. Either we don't get a recession, or we get one and it's not that bad, or we get one it's really bad. Something has to be different, I think, because it's based on history that you just don't kind of get in front of these that often, and everything goes smoothly. Let's pull up the indexes. So here's a chart of the NASDAQ, and it is 12:30 my time. So the market's, we got another half hour here on the market, but yeah, I was just sitting here and it felt like paint drying. You've got a 3-day weekend coming up. So it feels like the market's it's kind of done. It's kind of closed already. It feels like it closed a few hours ago, roughly. But it's 1, 2, 3, 4, 5 days up in a row here. It's just been, pretty strong. Here's the NASDAQ. It's going to close above the 50-day for the first time in a while. You've got this 200-day, which it hasn't been above in over a year. Wow, it's a long time. Yeah, probably I'd have to go back and look. I'm sure there's some stats on it. That's probably record breaking or close, top 5 as far as time spent under the 200-day. So if we can ever get above that, that'll be a good sign. But the market is shaping up. It's okay. It's not terrible. It's not great. There is stocks to buy. And we'll try to, at least I think so. I do own some stocks. I am short one stock, I think one. I think I was short 2 coming in. I covered 1 this morning. So I'm short 1. Oh no, I'm short 2. Sorry. I think I'd know this, right? I covered 1 today and I shorted 1 today. So I'm back to 2. But as far as like awaiting, it's light, and my long side is much heavier than my short. So I might be 60% long, 15% short for a net 45% long. That's just an example. I don't know exactly what it is, but you get the idea. So S&P 500. Sorry, let me close this. So it's approaching the 200-day, and did it ever? Yeah, it closed above there, but the last close above was in March of last year. So we're getting close to, a close above it. The Dow Jones, which has been the stalwart of all the indexes. So this is what I want to see the NASDAQ and the S&P do, right? So it gets above it. It runs for a little bit. It tests it. It's pretty nasty. And so far, it holds. That's what we need for the S&P. Other indexes, the Russell, I'll use IWM. So a little bit stronger than the other ones. And then the 2 ETFs that I own based on international exposure, which is where I'm most heavily exposed. You can see, look, above the 200-day, tests it, and now it's, kind of free and clear. And EMXC, which is one that I like, not as strong as DTH just yet. Emerging market ex-China. I feel like I've missed the China trade, which is why I don't have EEM, which I think has I don't know the weighting, 15, 20% exposure to China. China's in a bull market, so I'm risking that, but I feel like I've missed it. It's been a lot of these stocks have 50, 60, 80% off the lows. So that's what you see. I mean, if seeing is believing, the market seems okay. It's hanging in there pretty good. Do I have any other indexes I want? No, I think that's it. So let's jump to the industry groups, and then we will do the stocks. So I'm going to pull this up, and oil and gas field services, just knocking it out of the park. 9, which is really small. Tidewater, OII, Schlumberger. I guess it's SLB now. This is the kind of just in their own little universe of going higher continuously. So that's number 1 group. Retail, office supply, 1 stock. We can move on. Department stores, 6 stocks. I don't know. I don't really get too much into department stores. Commercial services, leasing, machinery, construction, mining. So I know TEX broke out recently. Oil and gas drilling, I do own a stock there, VAL, which I like a lot. So that group is strong. Steel producers, hospitals, machinery farm, which is the obvious ones. Gold is holding up much better. Look at the move, 184, 2213. Mining metal ores is an interesting group. Banks 4, and I have to say I haven't done much there. 78.33.16. So that would be one that I'll probably look at this weekend. So what I would do is double click banks foreign, click on the tab over here, choose stocks and group. These are all the stocks and group based on size. Let's click this button, show all component data. And these are the groups based on EPS and RS rating combined. So BSMX has the best EPS and RS. HDB would be second, and I would just kind of go through this. I don't know how likely I am to buy a foreign bank, but I'm open to anything. I want to make sure I'm, sometimes I've seen some of these stocks make really big moves. There's this BBAR. There's one Argentinian bank. I can't remember off the top of my head. I apologize. Is it this one? Yeah, GGAL. This is the one. I think this is Argentinian. Yes. And, this is, I remember this, that's 5 to 60. It's like a tech stock, like a cloud-based service stock. Now, this is a monthly chart, and you see these bars are pretty wide, so it wasn't exactly easy, but that's a big move. This is a huge move too, 2 to 20, another tenfold move. And these are monthly bars and much smoother. This actually looks very like participatable, if that's a word. And maybe this, look at those 2 weeks, is that or that. Who knows? Got to be open to that. Let's just go back to the industry groups. So you get the idea. It's actually pretty bifurcated as far as different types of groups. It's not stacked with all software or all oil and gas. The nice thing about oil and gas, I feel like if this is the second leg, my guess is we're in the second leg of the oil and gas bull market, and you've had some separation of the wheat from the chaff. Why don't we just jump into stocks to watch? So stocks like Devon, DVN, let's go to weekly, which this was your first move. Oil was zero negative at one point here. And then it ran to 130, I think it topped out at. So, everything's going to go up in that environment. And now, you've had a 130 down to 70-ish correction in oil. And so you want to look for the stocks, if you're interested in exposure here, that went down a lot less than that did. So Devon seems a little tired. PXD, yes, it's okay. It's not that great. How about FANG? Yeah, it's okay. It's not the great. How about AR, which is more exposed to natural gas? I think natural gas down like 80% in a short period of time. So this looks a lot worse. How about Sandridge? This doesn't look great. How about Val, which I think looks really, really good. You've got this base on base. It's coming out of this base. I don't know. So this looks so much better than those, right? Just beating its chest. Schlumberger, SLB, Tidewater. So there's real strength in this group. 9 and OII are the ones that. And then I think it's Weatherford, I think is in the machinery equipment, which is not a bad group either. But I just never found a place to buy it. I missed that one. So that group is pretty strong too. So it's nice that it's a little easier to know where the leadership is if there's leadership. Whereas before it was like, you could throw a dart. Exxon, it's okay, and probably Chevron probably looks very similar. Yeah, these two are going to trade kind of equal. On the tech side, I always love semiconductors if I can find something. So ASML looks very good. AEHR is just, really, really big strength. So they report earnings. I might have talked about this last Friday. If not, I don't. Up 30%, and then the next day it's up 16%. This type of power, and I do own AEHR. I do own it, is what I want to say. I just decided to, I just had to get in. I bought some a little bit, just kept going up, bought a little bit more, kept going up. I waited for a pullback, and yesterday I just couldn't quite get the pullback I wanted, so I bought a little bit more. So it reminds me of like Netflix and Cisco, the power. If this is the start of a new bull market, and look, AEHR, I don't know enough about the business, but it's not Cisco. I don't think their TAM, or total addressable market, is Cisco-ish. That's okay. I mean, Cisco went up a zillion, one of the greatest stocks in history. If AEHR can go up 50, 70, 90%, that sure would be disappointing, obviously, tongue in cheek. But here's the index line, and this is the bear market in the, this is 1990, July 99, 1990 to 91. You've got a little bear market here, and Cisco went down. And then the market just decided, to stop going down. You can see it make a series of higher lows. But when the market, you had like kind of its last low, that's where Cisco did this. And then for whatever reason, it just went gangbusters. Now, the market's a little different nowadays. I was looking at these percentages as 5, 9. It was just kind of more uniform. Information didn't travel as fast. If you read in the newspaper that Cisco was up 9% one day, the next day you might put your order in to buy. It's up another 8%. It's up 5% the following day, 3.5%. You get the idea. It was a little slower the way information moved versus like AEHR. It's like boom, 30% in one day. The computers have kind of I don't want to use the word ruined that, but I don't know, maybe I'm a little nostalgic. I liked it better like this. It was better for me. It was a little easier to get in. Though I wasn't trading Cisco in 1990. I was not in the business in 1990. But if you look at the power, like look how quickly it went from new lows to new highs. And your instinct is too fast. It went too fast. I'll wait for the pullback. And but by the time it went from 30 out of that base, if you use the cup, if you use the double bottom, it was 26 to roughly 45, 80% ish. Then you got your first pullback to the 10-week line. And then boom, look at that. Look how incredible, how standard, and then it got a little tough, a little correction. All right. And then it was a little tougher for sure. But the first move, so I'm looking for this in AHR. If I get that, that's where I would get aggressive. Netflix in 2010, was it? Here. Okay. Yeah. So January of 2010. Not much market-wise, but all of a sudden, boom, right? Jumps up. It's too high. It's got to pull back. I'll wait for the pullback. And you're just waiting and waiting and waiting. And that's kind of the action that I saw in AEHR. I noticed myself waiting for the pullback, and it was like triggered for me. Well, I'm going to be waiting a long time probably, so I better just go buy it. Again, from a market standpoint, I don't know enough about the business. I know a tiny bit. I know enough to own it. I know enough to be dangerous, but I don't think it's, Netflix-ish, Cisco-ish as far as, the size and scope that it can get. But, I'm not looking for that anyways. Who am I kidding? I've never held a stock long enough to have it go up tenfold. It's a little small. So, there's always something that makes me nervous. Earnings 14.8 million. It's a little small. But that is 54% increase, and the earnings growth. But somebody is stomping on it. It's elephants in the bathtub, right? And the volume, the average volume, which used to be down in here, average volume was probably around 1 million. Now it's 1.5 million. So it's becoming more and more liquid. As it trades more actively, and you probably get a few more institutions in there. So that's and then ALGM. I know Ropel mentioned this one on the IBD podcast, but that was a nice buy point right off of the moving average. So there is stuff out there. Do your homework. Blue Dot would have alerted you to this, or the way I found out about it is just being aware of my surroundings. IBD podcast with Jim Ropel, SLB, Blue Dot, Tidewater, Blue Dot, many times. The Blue Dot here, the first time I ever bought Tidewater was there because of the Blue Dot. So they're out there. Let the market tell you where they are. Be open, flexible to the groups. Might not be your favorite group, but it is what it is. You trade the market you have, not the one you want. Or you could sit in cash, and then you have to kind of watch them go up without you, which isn't any fun. Metals. So Rio is coming out of a long base. I do own Rio. BHP is coming out of a long base. I do own BHP. Vale, VALE, coming out of long base. I do not own that one because I have exposure in Brazil already with PBR, which is the oil one. So there's stuff in the metals area. And so you can have a kind of a, mini diversified portfolio, metal, energy, services. And then if you want some, you could find some stocks in the semiconductor area that I think are viable. And there's lots of other stuff. This is just kind of where I've been focused. But there are 35 stocks near the pivot. There are 41 stocks that recently broke out. DR Horton, Tex, that's minery construction. Buckle, that's retail. US Foods, Train, Five Below, McGrath RentCorp. So it's mostly, if you look at the structure of this list, it's mostly companies, kind of making things that, you can drop on your foot. I've mentioned that before. I think that's what you want. You want to buy companies that make things you can drop on your foot, whether it's a semiconductor or a steel bar or a drilling rig. That's, I think the market's shifted. I think there's been a change. But let the market tell you. And, and I'm always looking for disconfirming information rather than confirming, which will get me into my quote of the week. So Michael Steinhardt from Market Wizards. I love the Market Wizards books. I'm going to presume everybody has read those. There are, I think, 5 now. Market Wizards is the original. I try to assume that the guy on the other side of a trade knows at least as much as I do. Remember, in the old days, and this book was written in 1988 or copyrighted, which means he probably interviewed Michael Steinhardt in 1987. And in the old days, there was a guy on the other side. I would call the desk and say buy 10,000 XYZ, and the guy on the other side would say sold to you. Now he's short 10,000 XYZ. Well, I paid 10, and he's going to try to cover it at 990 or 975, which might have been the bid ask back then. That was why he would take that risk, because if he could buy it at 975, he'd make a fortune. Maybe he buys a little bit of it and he has to buy the rest at 10, and so he just makes a little bit. You get the idea. Now with the robots and everything and the market makers, it's not quite, you're buying it from a single person on the other end, but it might be an institution or a single person that's told that algorithm to buy Texaco or sell Texaco. And so let's say I buy Texaco at 52 and it suddenly goes down to 50. Whoever sold Texaco at 52 had a perception that was dramatically different from mine. It is incumbent on me to find out what his perception was. So a lot of us do work on, why XYZ should go up, especially once we own it. And, we try to find all the reasons why this could be the next great winner. But that's fine. I think you want to do that. But I also think you want to do a little bit of work on the other side too. Why could you possibly be wrong? And that will keep you flexible and open to changing your mind, to reversing or getting out of your position if something were to change. I think Tesla is the poster child for this. It seems like everyone is either it's a zero or it's going to be the largest company in the history of the world. And the truth is probably somewhere far in between. But I even though I have a negative slant on the stock, I'm short the stock, think it's going lower. I do follow on Twitter guys and gals that are highly bullish on Tesla. I kind of want to know why. What do they see that I don't see? So that helps me to maintain my flexibility when I have a position. So it works with all stocks. I think oil and gas can go higher, but I'm sure there's plenty of people that think otherwise. I think Kathy Wood thinks it's a dinosaur and it's going down. All right, well, why? What's her reasoning? So this will help you to stay flexible and open, and I think that's important. Anything can happen in the stock market, and also the changes that the market goes through in the leadership as it changes. Right now, it seems like energy and materials is the leadership. Fast forward 6 months from now, it might be different. Fast forward 6 years from now, it will definitely be different. Definitely be different. All right, I'm going to cut this short. It's a long weekend. Have a great holiday. And next Friday, I believe I will be here. Yes, we have a couple more weeks before the end of the month. Marcus Smith at investors.com, 800-424-9033. Thank you, everybody. Have a great week. Bye-bye.